Hi, my name is Paige. Today I will be presenting alongside Emily and Trinity to display our analysis and recommendation on the best long-term investment opportunity when comparing KMD brands and premier investment stocks. We will present our research and findings on behalf of our team to provide you with the information you need to make this future investment. KMD Brands is a global outdoor lifestyle and sports company. Kathmandu Holdings launched in 2009 as a publicly listed company. Their current subsidiaries and acquisitions include brands such as Kathmandu, Oboz, and Ripco. All brands are certified B corporations, meaning their businesses meet high standards of positive social and environmental performance, accountability, and transparency. The Managing Director and Group CEO, Michael Daly, and David Kirk, the Chairman, work alongside the board to provide strategic oversight to manage the brands effectively and push them towards their goals. These goals include expanding the business, bettering the customer experience, expanding digital transformation, increasing sustainability, and even aiming to reach a 0% carbon footprint by 2030. Premier Investments owns numerous retail fashion chains within Australia, New Zealand, Asia, and Europe. Premier Investments owns the Just Group, which consists of many companies such as Smiggle, Peter Alexander, Just Jeans, JJ's, Portman's, Jackie E, and Dotti. The company was established as an investment vehicle to maximize growth in capital returns to shareholders through retailing, importing, and distributing. Richard Murray, the executive director, and Solomon Liu, the chairman, are both experienced members that propel the company towards their goals. Their goals are long-term sustainability, to increase their information technology and digital marketing, and to have a safe, inclusive, and diverse workplace.
In order to make a valuable investment, it is important to analyze the value drivers and red flags of each company in order to assess the long-term growth that they're capable of. KMD Brand's biggest value driver is the success of their online sales, especially as they continue to invest in their digital infrastructure to accommodate the growing desire of consumers to shop online rather than in-store. Another value driver for the brand is that they are planning to invest in long-term global expansion of the business, as all three of their brands have experienced strong financial growth recently. Sustainability is another value driver of the company, as KMD pride themselves on their B Corp certification and hope to further reduce their carbon footprint. While this may not currently affect the financial status of the company, it has a positive impact on their brand image, especially for consumers that make eco-conscious decisions when it comes to their buying behaviors. In terms of KMD's red flags, their most significant would be the high prices of their products due to the niche market that they operate in. Their current product prices require consumers to have disposable income in order to continue purchasing, which indicates the potential of a significant drop in sales in the case of a cost of living crisis. The company's second red flag is that the price of the raw materials KMD use to create sustainable products is increasing, meaning that the company will need to pay higher prices in order to continue creating their product while staying true to their sustainability goals. Additionally, their international freight costs are increasing, which is yet another essential expense for the company in order to ship products and materials worldwide and keep their profits high. The combination of higher costs of raw materials and international freight shipping could require the company to increase the price of their already highly priced products in order to continue to make a profit. The final red flag identified for KMD is their postponed plans for expansion, showing that they are currently unable to commit to their business proposals and may not be able to afford to expand, which isn't good from an investor's perspective.
In comparison, Premier Investments' most significant value driver from an investor's perspective is the high amount of profit they've made in the past few years. The most successful brand, Peter Alexander, doubled in their profit over the course of the last 3 years, likely due to their second value driver, which is the company's long-standing status as a retail giant and multi-brand business. As they've been operating since 1987, the company has built a name for themselves within the market. The company's board members also come with a wealth of experience within the industries. Another valuable aspect of the company can be found in their online sales, which have increased in profit significantly over the past 5 years. Revenue from online sales rose from $68 million to $340 million from 2017 to 2022. And according to the 2022 year review of Premier, 22.7% of the year's profit came from online purchases. Due to this, Premier has chosen to invest further in their digital infrastructure, indicating the potential for the company's profits to increase further. Two of Premier's biggest red flags identified surround recent controversies that could impact the image of the brand and open them up to legal repercussions. During the 2020 pandemic, the company withheld approximately $3.5 million in rental payments due to lockdowns, which resulted in a large lawsuit being filed against them. Another controversy is related to the fact that the company was receiving job seeker payments from the government despite making major profits during the pandemic. As a result, Premier is repaying around $15.6 million back due to pressure from the public. The company also has about $69 million in debt as of 2023, which is another red flag in the company considering the previously stated red flags. After evaluating each company's red flags and value drivers, 3 potential short-term scenarios have been created to apply to the business context of KMD Brands and Premier Investments. A best case, base case, and worst case scenario have been created to help us decide which company is the better investment when considering potential future outcomes affecting their growth. The best case scenario would be the occurrence of an e-commerce boom and global economic recovery where the impact from the COVID-19 pandemic and Russia's invasion of Ukraine would cease. This would cause the cost of living and global inflation to stabilize, allowing for more consumer spending as a result. Unfortunately, this scenario is not very plausible given the current economic state of the world and the long-term effects that remain due to said disruptions. Within this graph, the scenario has a probability of 13% for Premier Investments with a steep growth rate of 35%. For KMD brands, however, there is a 14% probability and only a 27% growth rate, indicating the likelihood of this scenario occurring isn't as likely as others. This probability was chosen as the current state of the economy seems unlikely to improve in the short term, especially in a way that would be meaningfully impactful to either businesses.
This case scenario is one where we assume nothing changes and all variables would remain the same within the business environment. This would mean that the cost of living crisis, inflation rates, and supply chain issues would continue as they currently are, and online sales would grow at a steady pace for both businesses. This scenario is more plausible than the best case scenario, with a 30% probability for Premier and a growth rate of 29.47%, while there is a probability of 22% and a growth rate of only 14.54% for KMD. This probability was assigned as, while not completely unlikely for everything to stay the same, it is still more likely that the cost of living crisis and inflation rates may grow further. The worst case scenario, which has been selected as the most likely to occur of the three, would see the economy face a global recession which would severely impact both businesses. In this scenario, interest rates and inflation would rise rapidly, resulting in struggles with housing affordability and the general cost of living. Due to the high cost of living, consumers would become extremely limited in their spending capabilities, which would be reflected in both companies' sales profits. Both companies excelled in their online sales, though this would also be affected severely by a global recession, leading both businesses to have to fall back on existing finances to remain afloat. The cost of raw materials and international freight costs would also increase significantly due to inflation, putting KMD at a significant disadvantage, especially since Premier has high levels of profit to fall back on. Premier, however, has shown previous signs of reluctance to pay rent during a crisis, which would be likely to occur again during a global recession, opening themselves up to potential further lawsuits. The scenario is unfortunately the most likely to occur within the next 5 years, as Premier Investments shows a 57% probability with a 10% growth rate, while KMD displays a 64% probability with a negative 10% growth rate, indicating it would be affected more severely by the scenario occurring. This probability was chosen as the World Economic Forum's chief economists believe a recession is likely to occur this year in approximately 1/3 of the global economy, and the World Bank has predicted a growth in GDP of 1.7%, a growth rate slower than previous recessions in 2009 and 2020.
An important factor when choosing to invest in a company is the intrinsic value, which is a measurement of what the asset is worth compared to the current price the investment is selling for. This can help indicate whether the investment is undervalued or overvalued. We calculated the intrinsic value by determining the expected growth rates and weighing them depending on the probability of a scenario occurring. Then we use those values to understand the discount factor and the growth rate. Remembering to take into consideration the uncertainty avoidance percentile, which demonstrates how much we want to avoid uncertainty. Our value is 0.26, meaning that we aren't fond of risk and we are unlikely to invest in something without a high level of certainty. The discount factor includes both the impatience factor and the uncertainty factor, which are values that represent how quickly the value of the asset decreases and how much risk the asset holds. The smaller the discount rate, the higher the asset's present value is. For Premier Investments, the discount rate is reasonable at 19.70%, while KMD has a discount rate of 25.68%. This is slightly above Premier's and the average discount rate. The growth rate, however, for Premier is 19.09%, showing they are likely to grow at a high rate, especially in comparison to KMD's growth rate, which is only 0.58%. Both the growth rate and discount factor help to produce the intrinsic value of the asset, which is $29.68 for Premier Investments and $0.94 for KMD Brands.
The estimated intrinsic value for KMD Brands is 94 cents, whilst the company's current share price is $1.02 according to the Australian Securities Exchange. Consequently, this indicates that the company is overvalued as the market price is greater than the intrinsic value. In contrast, Premier Investments' anticipated intrinsic value of $29.68 is higher than the current share price of $25.37, suggesting that the company is undervalued. From this comparison of company figures, it is clear that Premier Investments is the optimal investment option, which provides the best buying opportunity and growth potential for the target investor. This is because KMD's overvalued stock indicates its price is not financially justified by its forecasted revenue and introduces a high risk of loss. Whilst Premier Investment stock is undervalued, meaning that it is trading at a lower price discount to its true value. This can lead to high future returns and significant growth in a brief amount of time as the stock increases to meet its true worth in the future. This is further supported by Premier Investment's strong value drivers and KMD Brands' alarming red flags that threaten the company's ability to achieve its goals. Premier Investments is the more promising investment, considering their board members' extensive experience in the retail industry and the company's highly impressive financial and business position within the market. The established company has experienced a high growth rate in their online sales, only anticipating to improve further due to their heavy focus on the development of their digital infrastructure. KMD Brands, however, is a less mature company, demonstrated by their lower rate of profitability and the company's inability to deliver on the objective of business expansion. Meanwhile, Premier Investments is set to expand due to their high profitability achieved in the first quarter of this year alone. The increase in the cost of living will largely affect both companies. However, KMD is predicted to be impacted much more severely due to their significant freight and raw material costs associated with their eco-friendly products. This places them in a less desirable financial position compared to Premier Investments and jeopardizes their goal of long-term growth. Although Premier Investments also has some red flags, the company is taking significant strides in minimizing these and rectifying their issues by looking at job seeker payments and much more. Furthermore, their red flags are not nearly as harmful to the client's objective of long-term growth as when compared to KMD Brands. Therefore, it is recommended that the client invest in Premier Investments as it provides the best opportunity for long-term growth. Thank you.